Hey guys, welcome back to the channel. Today we're going to be going over how to purchase your first home, what to expect, all that good stuff. And we're going to be going over payment, savings, credit, documents that you may need to get going, who to talk to, who not to talk to, who to stay away from, not to listen to your father. I'm just kidding. You can listen to your dad, but we're going to be going over everything that you need to know when you're purchasing your first home. All right, so one of the biggest things that I like to start with, and this is probably something that most realtors won't do. So guys, just a quick reminder, I am a realtor. I am not a lender, so I'm not quoting you on anything, but we do this a lot. So I just want to give you all the information and make sure you're good to go. But one of the biggest things that we got to think about is your monthly payment. What are you looking to pay monthly? Without that, we really don't have anything. People are like, I don't know, $1,500. Well, that's probably not gonna happen in SoCal. People are thinking, I don't know, maybe I can pay $5,000, right? Like, so knowing how much you can afford monthly is gonna be super huge. And what I mean by monthly, right? We're gonna be considering principal and interest. We're gonna be considering taxes and insurance, right? And then any mortgage insurance or anything like that, that's all gonna be included in that amount. But what are you looking to pay monthly, right? Because we can qualify you for $1 million. It doesn't mean you're gonna want to pay the down payment and the monthly payment for $1 million home, especially right now where the interest rates are at, right, guys? So we wanna give you an idea. Hey, let's start with the payment in mind and then talk about everything else. And then that way, you know, if you want a $4,500 payment, hey, okay, with a $4,500 payment, first time home buyer program, right? FHA, 3.5% down or 5% conventional. This is what you're gonna be looking at. And with this, now are you looking at a single family? Are you looking at a townhome condo? What does that look like? And with those, we can say, hey, this is the location you're gonna be in. So super huge, guys. That's gonna be super important. And also with location, you also gotta think about a couple of things, right? We live here in Southern California, LA County, you know, a condo townhome do have HOA, newer communities do have the HOA, but once you start going to the Inland Empire, Riverside, San Bernardino County, for the newer houses, you will have to consider a higher tax rate as well. Not for all, but for a lot of those homes, typical tax rate's about 1.3 or so. And with those newer homes, you're looking at 1.5, 1.75, sometimes 2. I've seen 2.1. So a huge thing to consider when you're looking for a home in those areas. We also want to introduce your debt to income ratio. We're not going to go too much into details. A lot of people say, hey, don't let your debt to income ratio pass 30, right? 35, right? A lot of loans, they can go up to 45. 47, 50. I know VA goes up to maybe like 60. So you have some options there. We're not gonna get bogged down on details on actually debt to income ratio, but it is gonna play a huge factor on how much you can qualify for with a home. So let's say you have a lot of debt, right? That can definitely affect you. But again, we're not gonna get too much into detail. That's a whole different video, and maybe for a lender. Maybe I should interview somebody or something. Next is gonna be money for down payment and closing costs. We still have to consider that. So typically what we tell people come to us, hey Robert, I'm trying to buy a home. I really want to get into a home. How much money do I need? Everyone's scenario is going to be different. But typically what I'm telling people, just to be on the safe side, you're going to want to save 6% of whatever purchase price you're looking at, right? So let's just to make the math easy. Let's say you're considering a $500,000 home, which in Southern California, I'll take it pretty far east, right? For $500,000 home, and we're looking at 6%, you're gonna want to have around $30,000 saved up, and this is gonna cover down payment, this is gonna cover closing costs, right? So this kind of gives you an idea of a number to aim for: 600,000, 36,000, 700,000, 42,000. And it's not going to be perfect. It's kind of give or take. It could be a lot less or it could be a little bit more, but it is going to give you an idea, right? 400,000, 24,000, 25,000, right? 300,000, you're going to be around 18, 20,000. Also, there's other factors that go into that, but that's just going to give you a general idea. Now, there are programs that can help you with your down payment. And the one we're going over right now, it's going to be with FHA 3.5% down. So 3.5% down. Let's go back to 500,000, right? So 3.5% down, that's for your down payment. Now, again, programs to help you out, they're there, but let's just focus on the 6%. 3.5% of 500,000, it's going to be 17,500, right? And then we're going to estimate closing costs to be at 2.5%. Right? Again, not quoting on you. It's not going to be perfect, but 2.5% of 500,000, that's about 12,500, right? Give or take. So that's what we're calculating. So total, it's going to be 30,000, right? So it's just an easy way to calculate how much money you're going to need, right? So people probably thinking, well, right now I'm going to purchase a home. I heard sellers are giving a lot of credit. Yeah, some sellers are giving credit depending on the home. This was a little bit more towards like the end of 2022, beginning of 2023. Now it's not happening as much, but you can still get that credit, right? Oh, wait, I'm considering a down payment program. Down payment assistance. What if I have zero money? Well, if you have zero money, you probably shouldn't be buying a house realistically. And again, that's just my opinion. I've helped a client, like the dude had like $2,000 total, and he was able to buy a house with like $1,891. I think it came out to his closing costs. And this is with everything, inspection, appraisal, everything. It was like under $1,900, which is insane. But I haven't done too many of those. So there are programs, there's 100% financing, there's VA loans, there's a lot of stuff that you can qualify for. But again, 6%, it's going to kind of be that magic number, so it gives you an idea. So a lot of people think, I have to save 20%. Like, this is going to be the only way. Well, one thing that I would consider is really looking at the numbers, right? So if you're looking at a 3.5% down compared to a 20% down, what's the difference in payment? Right? Is it $400, $500, $600, maybe at most, maybe $700? Like, I know that can be a big difference, but a lot of times don't let saving money get in the way of you purchasing a home if that's what you're ready to do, right? So quick example, she's probably gonna watch this, but we have a client, I met her at open house, right, in the city of Almani. Met her at open house. We've been in communication for years. She now follows me on Instagram and all that. An amazing person. But in her mind, she wanted to save 20%. And that's what she wanted to do because she didn't want to pay the PMI. So she's been, staying with family or whatever. If she would have bought at the time that we met, she would have purchased a home around $480,000. She could have bought it with 3.5% down, right? She would have been in a better spot then than now buying that same home in that same area. That home is now probably around $675,000, $700,000 at 20%, right? So she wanted to save up the 20% to be able to purchase that home, but that home is no longer $475,000. Now that home is $675,000. So a $200,000 difference in the time that took her to save up 20%. So if you save the 20%, great. That you're going to be in a really good spot. And hey, if you're getting that help, awesome. Like, let's do that. But don't let that stop you. The amount of payment, sometimes it's better just to put 15% and keep some of that money in your pocket, or to keep 3.5%. To do 3.5%, keep the rest of the money in your pocket to be able to do something with it, fix up the home, or even, just have it for a rainy day. So that's going to be a huge difference when you're thinking about 3.5% to 20% for the down payment. And again, we estimated about 2.5% for closing costs. We talked about not having money. So what if I don't have any money right now? What should I do? Well, on the first part of this video, we talked about knowing what you want to pay monthly. So this is a cool trick that I like to share with people. So if you're looking to save money, let's say you're comfortable with a $4,500 payment. Say, Robert, I'm good with the $4,500 payment. That's what I want to make. And my question is going to be, hey, how much do you pay for rent now? Right? So let's say if you don't pay anything for rent, great. Save up $4,500 a month, you're going to be able to do that, right? So what I'm saying here is pay yourself first. So let's say you rent, for $2,500, but you said you're okay making a $4,500 mortgage payment, right? So now there's a $2,000 difference there. So with that $2,000 in a year, you can literally save $24,000, right? Just if you start paying yourself first. You already pretend like you have that mortgage payment and you say, here's my $4,500 mortgage payment. You pay your rent of $2,500. There's an additional $2,000 in a year. That's going to be $24,000, right? Tax, and then maybe you get a return on tax. You save that. I mean, you can literally go from 0 to $30,000 in a year if you just follow that plan. Credit score. Now, hey, Rob, my credit score is pretty bad. I'm kind of worried. Where does it need to be? Right, so we can do stuff as low as 580 for FHA, right? There will be lenders out there that they won't even consider your credit score. That there's programs out there to help you, but let's just go with the typical buyer, right? 580, we can do it. 680 is around the 660, 680 is really where you want to be to get a better interest rate. Anything in the 700s, you're golden. Right? Like anything above 740, like it don't matter if you're 745 or 850, it's all going to be pretty much the same. Again, not quoting any of you guys, but just kind of giving you guys a range, right? 620, 640, still pretty decent spot. 580, we can definitely do something, but you're going to pay for it, right? And what do you mean? What do you mean by pay for it? Well, you're going to pay more in interest, right? The interest is going to be higher because, for the bank, you're more of a liability, right? Because you have the lower credit score. So take care of your credit. That's going to be super important. Make sure it's a priority if you're looking to purchase a home. Let's say you're young right now and like, I want to purchase a home. I asked my sister yesterday, like, hey, what's your credit score? And she's like, I think it's like 727. Great. Let's get it above 740, right? Like, because if you want to do anything, you need some credit. But there are going to be some programs where you don't need any credit. But I'm not going to get into specifics. If you guys want any specifics on that, contact us and we can go over that. So items that are going to be impacting your credit, obviously, are going to be like late payments, high balances, running your credit, for whatever reason. Those are all going to affect your credit score. So one thing is, like, I'm not going to sit here and give you credit advice necessarily, but I'm going to give you advice. If you think your credit is bad due to whatever reason, have the conversation with us and we can get you connected to the lender so they can kind of advise you, like, yeah, we run a simulator, we can help you with this credit score. And hey, maybe we can't. Maybe you have to go to credit repair for 6 months, a year to be able to get your credit up to be able to do something. So it's always knowing where you're at now and where you need to be, because if you don't know where you need to go, you're never going to get there. All right, so we talked about affordability, we talked about savings, credit. Now, okay, well, what if I'm okay with all that? What steps should I take next? And the next step is going to be getting pre-qualified with a bank, a lender, a broker, right? And just getting all your documents in to know, like, hey, I can qualify for the loan, right? So how do we do that? How do we go about getting pre-approved? What do we need to do? First, I always advise having a conversation with either me or somebody on our team to kind of lead you to the right person, right? So let us hear your scenario. Let us hear what your goals are, what you're looking to do. Is it luxury? Is it a mobile home? Is this your first home? Are you VA, right? Are you doing 20% conventional? Are you doing a high balance loan? So there's a lot of stuff that goes into picking the right lender, right? Hey, maybe with your personality, you're gonna jive with David better, or Sergio better, right? Or Cole better. Like these are the different lenders we work with, and there's a lot more. I'm not gonna sit here and name everybody, but we want to partner you up with the right person. So first, having that conversation with us so we can lead you in the right direction, lead you to the right lender. All lenders are, as far as the numbers are kind of the same, but not all lenders work the same, and kind of learning your personality and all that. And that's going to go a long way because you're going to feel comfortable. But if you go to a bank first, let's say a Wells Fargo, or you're just going to get whoever is next in line. So having the conversation with us is super important so we can lead you in the right direction. Now, number two is going to be, hey, what do I need? You're going to need documents, right? What kind of documents am I going to need to get going? So some of the documents that the lenders are going to ask for, and everybody's scenario is different, but again, traditional buyer here, we're talking about W-2. We're going to want 2 years taxes. We're going to want 2 years of W-2s. They're going to want to look at 2 months of bank statements, 1 month of pay stubs, right? And then they're also going to ask for like ID, social security card. I don't even know if they ask for social security, but they're going to ask for the ID and all that. And then they're going to be asking questions about income and all that. But that's once you run the application. So first is the documents and then running the application with the lender. Once they go through the full approval, then, if there's anything that they're missing, or they need to do some homework on, or you need to work on credit, then you're going to know. That's really the only way you're going to know is once you submit everything, they run the credit. And now you're like, hey, I'm rather ready to go. I'm 6 months out. I'm a year out. This is what this looks like. Income's maybe not there. Payments, the reality of payment, hopefully we've gone over that before we even send you to the lender. We want people to, if they're going to run their credit, we want them to be realistic about payment. So that's what that's going to look like. Now, hey, you got pre-approved. You submitted all your paperwork. Then we talk about location, right? I always talk about people buying in this market. Do you have a solid job, right? Are you good with the payment? Are you good with location? If all those are good, let's roll. So guys, I wouldn't get bogged down on the details of actually, hey, what loan am I going to go with? Is it FHA conventional? Before you get going, don't worry about that just now. Is FHA better than conventional? What we like to do is help our clients prepare, right? So again, we're leading you to the right lender. Now, what they're going to do is hey, this scenario is with conventional. This scenario is going to be with FHA. This scenario is going to be with VA. This is what this is going to look like. So every scenario is going to be different. And so knowing I want to go conventional because of this. Hey, look at the numbers. The numbers are going to tell you which way to go and what's going to be best for you and your family. So guys, hey, now you're pre-approved. What happens, right? We did all the stuff. We went over affordability. We went over credit. We went over savings. We went over getting pre-approved. You're pre-approved now. What's next? So the next step from there is actually sitting down with one of our team members and going over what it looks like to purchase a home, going over inspection contingency, going over appraisal contingency, loan contingency, earnest money deposit, writing up an offer, right? Looking at the location that you guys are looking to buy. And we can do that in person, Zoom call, at a house. We can do all that for you, but we want to help you understand what you're getting yourself into, right? You're probably thinking, man, I don't even know how to spell contingency, right? Because I don't know how to spell contingency. I'm kidding, but we want to help guide you in the right direction. And so knowing what location you're going to be in and being realistic about it, right? Knowing what an offer is going to look like once we send it out, knowing that you can submit 4 or 5 offers at once without really having to commit until we do that earnest money deposit, right? I always get the question, wow, how many offers can I submit? Right? How much is that going to cost me? A lot of money? No, it doesn't cost you any money unless they accept. But they're like, okay, well, what if all 4 offers get accepted? Well, now you have a choice, right? Hey, I want to choose this one. I'm going to do my earnest money deposit there. And the other ones, we're going to tell them, hey, you know what? We're just not going to move forward and we're going to be okay, right? So no legal advice here, but it's just the way it's been operating, right? So guys, let's help you get into a home. If you're ready to get going, we kind of went over what every step looks like. Reach out to us, right? Share this video with somebody that's looking to purchase their first home. Most people don't know where to start. They listen to their family. They listen to, their dad, which is good, their uncle, their broke uncle, right? But they these people might have bought a house, 25, 30 years ago. It's totally different. It's literally shifting. It feels like every 3 to 6 months that the market's shifting. So can you imagine 30 years ago, 15 years ago, it's totally different, right? Before they would just go, they would see the house and they're like, yeah, I want this house. It's not like that anymore. So if you're looking to get going, guys, there's going to be a number in the description. There's also going to be a link for Calendly. You can book a call with us. Guys, book the call. It's going to be a 15-minute call, maybe even less. We'll get you, to the right agent, to the right broker, to the right lender to be able to help you purchase your first home. We work with a lot of first-time home buyers. I want to say about 75% of our clients are first-time home buyers. The rest are going to be people who are selling the homes and upgrading to a nicer home. But this is what we specialize in. This is what we do. Whether it be resale, new builds, there's a lot of different in resale and new builds, and we've gone over that in some of our other videos. But yeah, guys, reach out. Let's get you going. Again, guys, thank you guys for being on, watching the video. Don't forget to like this video, subscribe, and we'll see you on the next one.